Hi, my name is Ilma Mani, and I'm the Senior Financial Advisor here at National Capital. As a disclaimer, this video was meant for a more general view of the situation. Make an appointment with us for a more detailed recommendation. Now it's time for your market update, and the burning questions seem to be global inflation, the geopolitical landscape in Europe, and perhaps a looming recession. I'll start with a quick summary now, and if you want to dig in further, watch the rest of the video for a more detailed view. So, for the summary, growth at a low point in Europe at the moment and in the US, and it's in part due to lingering COVID side effects, rising interest rates, and the conflict between Ukraine and Russia. The Asian Pacific, on the other hand, remains a comparable overachiever. While central banks persist in aggressively raising interest rates to combat inflation, predictions remain raised. Interest rates, on the other hand, are expected to come down in late 2023. Countries like Japan, India, Turkey, Australia, and China are amongst the biggest countries expected to avoid a recession. And when China will ease its draconian zero COVID policy, it's yet to be seen, but the world has its fingers crossed for early 2023. So what do? Speak with your investment advisor, discuss your goals, put your fears to bed, and seek where the opportunities lie. Now, for a bit of a more in-depth, detailed view of the current situation, inflation. Where is it going? First things first. That was the first question that I mentioned. Core inflation, not including that of food and energy costs, is expected to remain at high levels for the remainder of this quarter, but it's headed towards the peak in most countries as we head into slower growth in the next quarter and inflation starts to moderate. Interest rates and inflation seem to have largely culminated in South America, which is a good thing, but not much activity from here on out. High energy rates in Europe caused by the conflict between Russia and Ukraine, they've caused more inflation and higher interest rates, but the unemployment forecast in the European Union and the US has lowered. Inflation remains again relatively low in China and Japan. Now, second question, what's happening between Russia and Ukraine? What does it mean? Now, the US, the European Union, and Germany in particular are highly affected, but they are counterbalanced by larger countries like China, Japan, Turkey. India is safe, and it's expecting, in fact, a high GDP growth alongside with Spain, surprisingly, by 2025. Recession? That's the third question. That's the question we all want to know the answer to. Countries like, again, Japan, India, Turkey, and Australia are among the biggest countries expected to avoid a recession. With China having no beef with Russia, even with limping property construction industry, with stable inflation and interest rates banded together with the group of the bigger countries I mentioned, they can help carry through the investments over the next few months on a bit of a less rocky ride than we anticipated. The GDP has potentially reached its lowest point in growth in the last 40 decades, and although that is the worst possible outlook, and that's at 1.7 rate of growth, there are certainly more optimistic schools of thought on that, which suggest that a global GDP growth rate will go as high as 2.4 again by 2023. That's just next year. Europe has also managed to fill its gas storage to 90% ahead of the winter coming up in the northern hemisphere, and gas prices have fallen by as far as 20% since the conflict first took place. So things are not looking as bad as they seem. While China's economy is suffering from strict COVID-19 restrictions and struggles for the construction industry to deliver, it does have low inflation, like I mentioned before, and it's expected to continue to be stable. Plus, the restrictions are already baked into the economy, so really it's just the construction industry that needs to shape up. How does that affect my KiwiSaver? Do I need to do, you'll ask me, and I'll tell you, do not panic. The markets are going to recover. Look at this picture. See what's happened in the last 80 years that we've had a market. And as you can see, we've had other periods of unrest, as indicated by the little red dots throughout the graph. And the good news is that they have passed. Look at how long they've lasted in comparison to the green growth periods. And plus, Each time these things happen, we learn more, we get better at implementing processes faster, and create more safety nets. Like so many other periods of unrest before, this too shall pass. Speak with your advisor, plan accordingly, think about what your goals are, what goals you have, and whether you're well positioned for those. Are there opportunities there for you? Thanks for listening. Have a great one, and see you next time. Bye.